It's 6 o'clock in London, it's 1 p.m. in New York, it's 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Good morning, greetings, good afternoon, or good evening, depending on where in the world you are today. My name is Patrick L. Young. The IPO-VID Livestream Series 15, Episode 6, that gets us to Episode 90, starts here. And sadly, to begin with, there is a hole in the parish of exchanges today, and equally one in the world of real tennis. Alas, Nick Carew-Hunt, the longtime market secretary of Life, has passed away after a relatively short period of illness. Nick was definitively one of those who acted as the management glue holding together the Life Exchange from its conception to fruition, and through the Royal Exchange floor creation, the Cannon Bridge move, and finally onwards and upwards to electronic markets via mutual ownership, Euronext ownership, then the NYSE interregnum, and into the Ice Age. Along with John Foyle, Nick created a magnificently creative team at the heart of the exchange. RIP, a very good man who has left us utterly prematurely and made an enormous contribution to building the London and European derivatives markets from a standing start. Condolences to Nick's wife Victoria, who is herself a distinguished photographer, and all the Carew-Hunt family. In more cheering news, Expansive. You may remember Expansive. We had their magnificent head of ex-markets, Henrik Hasselknip, on the show a number of months ago. Great news as they continue their progress towards an IPO with another fundraising round complete, as well as adding new investors such as Bank of America and Goldman Sachs, to give us two household names. They've also completed the acquisition of Evolution Market, as well as raising $125 million. Over in the world of nickel, well, the FCA have flexed their muscle and they have blocked the LME plan to restart Asian Rs nickel trading. That's coincided with today news that the General Counsel of the London Metals Exchange has decided to step down from that role in the relatively near future. Wow, the Asian Rs are not going to be happening for nickel for the time being. The FCA is saying no, which is understandable, but clearly will focus the LME's recovery mindset post-nickel nightmare, and of course the departure of Chairman Gay Huey Evans. Finally, across town in London this evening, the London Stock Exchange's chief, she says the London markets must be young and scrappy to compete. Interesting thoughts there from Julia Hoggett as she continues her charm offensive in efforts to try and revitalise and advance the London IPO markets, and indeed secondary trading across the LSE and indeed the many other exchanges that trade stocks in London. Our guest today, well, he's someone who might know a little bit about scrap, I suppose, in some way, shapes or form, but certainly he's a commodity expert. Les Mail, we're going to be talking about developing commodity exchanges with Les Mail. Les was most recently CEO of both the Dubai Gold Commodities Exchange and its clearinghouse counterpart, the Dubai Commodities Clearing Corporation. It's the largest and most diversified exchange group in the Middle East. Les is a leader in the development of Europe's first gas spot market. That was the OCM. He later became commercial director at EnMO and then APX-Endex. In 2010, he became the European managing director for the Green Exchange, which was acquired by CME, where his role involved taking on the European gas and global LNG strategy for Nymex, prior to joining Nasdaq in 2014, where Les was responsible for EU-UK client-facing activities on the Global Commodities product suite. Since then, of course, he's had this very, very successful period as chief executive of the Dubai Gold Commodities Exchange, which just came to an end at the end of last year. Les, greetings. Welcome to the show. Where in the world are you today?
Well, thank you for having me on your show, Patrick, and hello, everybody. It is 10 o'clock at night, and I'm here at home in the wonderful district of the Marina area in Dubai of the UAE.
Gosh, how glamorous. The Marina area in Dubai. We're sitting in Valletta in Malta, where it's rather more chilly at this point in time, and it's several hours earlier than your evening. Let me just go over and say hello, good evening to some of our regular guests. absolutely a pleasure to see already on the show today. We've got Les Calvert. Good evening, Patrick. Les et al. Hello, Les. Great to see you once again. Thanks for joining us. And also, I do believe Peter Secon has joined us. Good evening, all. Hello, Peter. Hope Ari is very, very well. Lovely to see you back watching the show this week. So, Les, very interesting. Developing commodities exchanges. I mean, it's become something which was, well, quite the thing maybe 20, 30 years ago. Then one might argue it went through a bit of a hiatus. And then in the course of the last 20 years, it's absolutely been enormous again. I mean, it's been a huge business as product expanded. How on earth did you get into the commodities business?
Well, that's at risk of boring everybody with my career history. It's something that started in an engineering capacity. Which was the old gas industry of the UK in the north of the country at a time in the early 90s. And not long after that, the gas market was going through a liberalisation and a fragmentation driven primarily from the UK government at the time, and the need to open up the gas network for competition. Notably shippers, those third-party countries that were transporting gas through the pipelines. I think it was about 94, 95, there was a need to develop a standard transportation and storage contract, which became the network code, which I worked on. And that network code became the benchmark template across Europe, notably the PSV and indeed the more liquid TTF now than the NBP, which itself was a huge success in the creation in the mid-90s. And quickly we realized that the kind of bulletin board style of trading as it was then, the flexibility mechanism as it was called in 95, 96, needed a more mature, professional, screen-based method of trading, and not something that was the core activity of the gas transporter at the time. And from that, I worked and led that project to create Europe's first spot gas trading exchange, and then went on to lead it. So really for the last, I can't do the maths that well, I should have taken a maths degree than engineering, but 25 years really it's been in the commodity exchange space, and one that I'm very happy to have lived through, as you say, some about turns we've seen in the tailwind more recently in regulation.
Very, very interesting altogether. Of course, you share an engineering background, therefore, with Jeff Sprecher, the boss of ICE. So it's not unique to find engineers around and about this space. And indeed, I think the whole Moscow exchange, it was all built by genuine rocket scientists and engineers, as I recall. So just run back a step here as we look at the gas market overall. You ran through a series of acronyms. Maybe we can just quickly, you had NBF, you had NBP, sorry, and you had TTF. For starters, because they're things that everybody hears in the news headlines, but I think a lot of people who aren't actually involved in and around the gas and energy business might be confused by what they are and what the differences are.
Well, I think we looked towards the US at the time in the early 90s as a leader and a benchmark, and the Henry Hub at the time was what we were focusing on. And of course, the Henry Hub isn't such a thing at all. It's just a circle, if you like, or other shapes may be available, drawn around a convergence of pipelines. But there was a thought that there needed to be some kind of equivalent hub for the UK gas, which, by the way, has multiple quality standards. So this idea where we could create a kind of entry-exit model, that no matter where the gas flowed into the country, that was the entry to this hub, and then there would be various exit points. In essence, the hub was therefore the shape of the UK country, and so was born the NBP, the National Balancing Point. And that, as I say, became an example that other European markets followed, most notably in Holland, and I had a hand in creating what was then the Dutch hub, the TTF, the Title Transfer Facility, which is, if you like, a carbon copy of the way that the hub operates in the UK as well. And of course, as regular readers of Patrick's Exchange Invest newsletter will be aware, that TTF has somewhat recently been in the news with the long tentacles of the EU regulators.
Yes, it's interesting. I mean, what the EU have come up with strikes me as quite worrying, because they really are potentially intervening into markets. Although on the other hand, I suppose we can, fingers crossed, say the good thing is ever since they announced this policy, the price of gas in the natural market has actually been declining. Long may it continue to do so.
Yeah, I mean, it's not, I don't believe, and I don't think anybody who works in the markets believes, it's the role of the regulator to set cap and collars for market prices. That is not the role at all, in my personal opinion. They are there to set the playing conditions, if you like, for the football players on the field. But to have the ecosystem, the infrastructure, the rules and regulations, the policies, procedures that we all abide by, what the price then becomes is therefore the price discovery of the market. It's a truly reflective price of the market. If we start then to interfere in a retrospective kind of media-led hunt of changing those pricing mechanisms, I think it's a slippery slope. And I was reflecting on this today with a colleague of mine in the industry, where when the UK-Belgium interconnected gas pipelines is from Baton to Zeebrugge first got commissioned in the late 90s, there were some very, very learned analysts who had modelled that the negative flow wouldn't happen for at least another 10 years. And those of us who had some fledgling knowledge of the markets at that point sort of snorted with derision, much to their disgust, these analysts, because the market will test it out. You know, if you try to control the market, be prepared for it to come around and bite you on the rear end. And that's exactly what happened. Within about 2 months, the interconnector did flip. It went into negative flow, because that's exactly what the market traders were trying to do. They were trying to find the limits. They were trying to find the edges of that playing field within which they actively participate. So the idea of a regulator trying to cap prices is a dangerous one. And I'm pleased to see that the ICE Exchange, who are the leader in our parish, in my mind, came out and said there's consequences. Basically, it was the subtitle of what they said. There's consequences of those actions.
Yeah, I think ICE have done very well, actually, in terms of, I mean, it's not just as market leader, but they've actually given a lot of very mature reflection.
Yeah.
They've put numbers around things. They've demonstrated what goes on, because it's very easy for market people to jump up and down and say, well, it's just not going to work. And it's rather like those frustrating conversations you have with the man in the garage when your car's broken and you make a suggestion. He goes, it's just not going to work. And it's like, well, explain to me why. And I think they've elucidated very, very well on those points. They really, really have. Let me say hello and good evening to Matt Timms at this juncture. We have a couple of questions from Peter Secon. I'm going to hold those for just a minute, because I want to advance your narrative, your personal narrative, just a little bit, because we have you engineering, we have you building gas markets and so on. And then, so you got to building effectively the UK gas market, developed it into a remarkable size from something that didn't exist. And as you say, a lot of people were actually cynical that there could be a market in the UK alone, let alone there could be a market that could interconnect with other countries. And this was running effectively in parallel with the sort of the deregulation of electricity as well across the continent, right? It must have been a really, really interesting time. So take us a little bit through your career journey there.
Well, I mean, and from that UK, the OCM, the on-the-day commodity market, the spot market, which even today is still beating its way through on a daily basis, and is actually owned, acquired, and managed by the ICE Exchange. From that, then the start of the sort of global exploration happened as I set forth into the Netherlands and the Belgium area, working for what was the APX group. It acquired a derivatives market locally there called EnMO, and this is for gas and power in the Benelux region, where we were operating spot and derivatives markets in the gas, power, and carbon space, some exploratory work in the biomass space as well at the time. And that index market, sort of long-term parishioners will know, was eventually acquired by the ICE exchange as well. About 12 years ago, no, I'm getting the maths a little bit wrong there, but I then moved to a carbon exchange to run the European business. It was what called the Green Exchange in 2010, a US-led initiative looking at the EU ETS, the emissions trading scheme at the time, to see whether we could learn from that and apply it in the cap and trade model that was being touted at the time in the US. That came to nothing as President Obama lost his majority in the Senate. And cap and trade then became sort of three words that you don't hear so often nowadays. That was acquired by CME, and I went to work for the Nymex, as I will still continue to call it. A lot of European gas traders, with no disrespect to them at all, but probably wouldn't know how to spell CME. But in terms of the Nymex, they fully understand what that was, where, yeah, we were looking at entering the European gas market at the time. CME had some grand plans for the London clearinghouse, the CME and the CME Europe, yep, which ultimately kind of faded away. It was disappointing. And again, following the theme of the opening of the show, it was I think the death of Bob Ray, the untimely and very sad demise of Bob, that kind of was the start of the breakup of CME Europe, actually. And then from there, I flipped into Nasdaq. A very happy 4 years at Nasdaq in Europe, in Stockholm, and to some extent the US. Nasdaq are a wonderful exchange led by a very accomplished CEO in Adina, far different kind of style of management to her predecessor, both of whom I was able to see. And I was very happy at Nasdaq, and it hadn't been for this opportunity in Dubai, I think I would hopefully still be in that role. But the opportunity to lead the DGCX, which had an interesting history, but more importantly, not just the exchange, but the self-owned subsidiary. The clearinghouse was what really gave me the excitement and the opportunity to move over at the end of 17, early 18.
So it is, I mean, it's a very interesting thing, because what is it, roughly 10 or 12 years ago, something like that, Dubai really had this great leap forward. Lots of exchanges were opened, and most of them had a very, very strong government backing around everything, but a series of different actors entered. And actually there's Nasdaq Dubai, which is a kind of a stock market. There's Nymex, indeed, they have their Dubai Mercantile Exchange, which is still trading to this day in various different crude products and so on. And then you have the Dubai Gold Commodities Exchange. It does have quite a fascinating pedigree even before you arrived there. Maybe you can fill us in on some of the sort of basic history.
Well, it was actually launched in 2005, so it's 17 years ago, coming up 18, I guess. And yes, it had some Indian software behind it. It had a somewhat complex shareholding. It wasn't fully owned by Dubai. There were other players in there as well. And over time, that eventually was simplified to the 100% full ownership of Dubai, with the parent company. And apologies for the acronyms in advance, but the parent company being DMCC. That's a free zone. It's a very successful free zone, the Multi-Commodities Centre, which hosts, I think, about 23,000 SMEs in the JLT, Jumeirah Lakes Towers district of Dubai. Very successful diamond business, but also import, export of tea and coffee, as well as being a sort of a property play in itself. For DGCX, I was, I think at the time of appointment, the 8th CEO in 12 years. So do the math, as the Americans would say, but that would kind of give you a sense of some of the bit of a turbulent history it had, and it needed to be settled. It needed to have sort of a smoother course sailed, and I hope I bought that, and from that kind of consolidation we were able to grow very, very well in 18 and 19 before the COVID pandemic hit our markets. And our markets are and were FX, the currency space, equities, hydrocarbons and metals. And yes, we were and still are the leading derivatives exchange in the MENA region.
Yes, it's an incredible success story, DGCX, and it has, as you say, this fascinating pedigree where it came out of a sort of, first of all, an Indian driving force in Jignesh Shah and his team, who also, of course, were the people behind the Multi-Commodity Exchange of India and indeed created the technology through their own technology software vending company. But it had been somewhat challenging. And I mean, actually, what you're talking about, eight and 12 years or something. And I think your predecessor, to be fair to him, he'd managed to be around for 2 or 3 years as CEO. So you had an incredible early stage, which was like one of the worst league football teams you can ever imagine. Towards the end of a very scrappy season was the birthplace of DGCX in management terms. Let's go to a couple of questions actually and talk to Peter Secon. Peter has a couple of questions here which are really fascinating. First one, evening Les. What new changes, challenges are you facing in regards to regulation and applying a framework of rules and procedures to further regulate trades and commodities? And as you're now free of Dubai, Les, feel free to answer that from a UAE perspective or anywhere in the world, actually, you'd like to reference.
Yeah, it's a very intelligent question. Thank you, Peter. And yeah, I am somewhat freed up now. And then for the viewer, Patrick has been trying to get me on his program for a couple of years, I think, and I was somewhat restricted from doing that. So it's very pleasing to be free of those restrictions. And I'll try and give a balanced answer because I'm somewhat critical of the country. I think to put that into perspective, I think how far the UAE has come, a country that is only 52 years old, to have 2 leading stock exchanges in the DFM and ADX, to have the leading derivatives exchange, not to mention Nasdaq Dubai, DME, and more recently the success of IPO-VID, is a huge achievement. But the challenges for me are some of that success. It's the very fragmentation that we have. To some extent, the exchanges didn't overlap. That's now starting to happen. But to what value does it add in the marketplace, where those exchanges actually operate 3 or 4 different clearing houses? You've got 2 just for the equity markets within the country. Now, one argument may be, well, let them fight it out and let the best man win. The problem with that is that it's to the disadvantage of the market themselves. Why would the market splinter and fragment their very precious collateral and put it in these different pots? So I think there was a real opportunity to use the clearinghouse of DGCX, the DCCC, which had tremendous international regulation. It's very much at the top tier, both in terms of CCP 12, but also regulated as a third country CCP by ESMA and recognized as a recognized clearinghouse by MAS in Singapore, just to name 2. We could have really tapped into that. So I think that very kind of pace of growth has kind of overtaken a little bit by the inability to deliver what is really required in the marketplace, which is a degree of consolidation, at least for the collateral. You could have one central clearinghouse for the UAE with the multiple exchanges hanging off that as labels, brands, whatever markets in their respective space. So I think that would be the first of 2 areas I'm somewhat critical of. The second, and I'm hesitating to use the C word here of crypto, but it's still a dog's dinner. It's such a shame, and I see that same pattern being repeated, that growth and that demand, huge success. UAE and the Middle East has many cryptocurrency traders at a retail level, and it's great that we've got that retail participation in our markets that we didn't really have before COVID. But that very pace of change has meant that we've now got in this country, and I was trying to think, we've got 4 different regulators for cryptocurrency in a country of 10 million people. So when we talk about the challenges that we're facing, I'm not being critical or any way disrespectful to the efforts of VARA, ESCA, DFSA, FSRA, to name those 4. They're all working very, very well, but in a silo manner and without that kind of umbrella framework that the market are demanding. And to close on that argument, I think it was September 2021 when the DGCX first wrote to the regulator looking for listing of a financially settled currency pair and against the dollar and a Coinbase, I think it was, index at the time. Financially settled, so it's no physical, it's no wallet, just some months or quarters, whatever it might be down the curve. And to this day, they're still waiting for regulatory approval to list that contract. So that, there's a need for some coherent and joined up thinking in this area.
That's very, very interesting as an answer and very useful. I hope you find it useful, Peter. Thank you very, very much for your question, Peter Secon. And actually, it leads into a follow-up question, which Peter had already delivered, which is therefore, how do commodity exchanges themselves look to expand further into developing markets and countries?
Yeah, he's prepared these questions, hasn't he?
And he's done his homework. Yeah,
I didn't prompt him, so somebody did. But
I'm very impressed. Yeah,
when I came in as well to DGCX and sort of opened up the books, you can look at products and you can look at services, and to some extent we looked at data as well. And quite honestly, there's very little point in developing Me Too lookalike products. DGCX, I think, did and still does punch above its weight. I'm very proud of everything that we achieved in the last 5 years from a very small core team running markets, 17 hours a day, 5 days a week. But the products and services will only get you so far. One of my first decisions, I think, in that first week of 18 was to stop the market making of a spread contract that we were doing between the WTI and Brent. Why? Those are global contracts, of course. Well, simply because the ICE market is very liquid. They have a 1 cent spread, and you're not going to get inside a 1 cent spread. The best you could possibly do, and by spending a lot of money, is to get the same spread. And even then, it will only be for fractions of a second. So to have a lookalike product, it doesn't really add a USP. There's no value add there. You need to be looking at innovative products. And I'll come on to services in a second, because DGCX did do that. They had a Sharia compliant spot gold. There was the FX rolling futures, or the spot perpetual contracts that we had, to name but 2. There's also more recently the Pakistani rupee and Israeli shekel contracts that were listed. So we were trying to add value whilst being pertinent to the local market, because those lookalikes, why trade Brent? If you want to trade Brent and TI, trade it on ICE, trade it on Nymex, you'll be fine there. So if we're not going to have lookalikes, where can we move to? And this comes to, as I said earlier on, the reason that I joined, and it was the clearinghouse. That's the jewel in the crown. It's a jewel in any crown of any exchange. And there's a few things that needed tidying up in terms of the legislation and the infrastructure of the systems. But in essence, what you've got is one clearinghouse clearing for one exchange. That's great, but echo the theme I was talking about earlier. It needed to clear for multiple exchanges, and that's something I'm still very keen to explore in our industry space. And we started to talk with emerging commodity exchanges, both in Asia and in Africa. These are commodity exchanges, not equity exchanges. I feel that national companies want to retain ownership of their stock markets and the control of the monies that flow within them. So that's understandable, whilst the governments might not want to white label a third country service. But for commodity exchanges, particularly if there was physical delivery involved, I felt, and still do, that there was some synergies to be had. Why, if you're an emerging commodity exchange in Africa or Asia, MENA, why would you go to the trouble of building a clearinghouse? They're expensive to build, they're expensive to maintain and to license. And here's a ready-made one, which we had deliberately and carefully in those 5 years positioned to be in a manner where we could offer that kind of spider's web service to other exchanges. I thought it was a good strategy. I still do think it's a good strategy, and I hope that the team can deliver that in due course.
Well, of course, one of the advantages, I mean, DGCX also had was pretty good connectivity. I mean, thanks to being there 15, 17 years, but also having built up its network, actually, you've got there was a very, very interesting network of members across the DGCX field, because there were companies across India, there were companies in Europe, in the US. You really had a remarkably good spread of access to that market. And that's something which also, I think, is very difficult to achieve in a modern commodity market, because it costs a lot of money to join a clearinghouse, and people don't want to join umpteen new ones. But at the same time, you've got the politics is difficult. Sorry.
Yeah, these things, like I say, these things don't just become liquid overnight. They take a lot of effort. And, I obviously, jumped on the shoulders of my predecessors, and I'm very thankful to the work that they did back then. I would just correct you one thing. We didn't have any US participation. There was no CFTC letters of approval there, or letters of no action. So all of our business was Europe, MENA, and Asia. About 20% of the business came out of Europe.
Very good. My bad. I stand corrected on that one. Thank you very much, Les. But certainly the one thing I think was very interesting was the development of product throughout, where DGCX, and I mean, you continued this and accelerated this. You're not afraid to go out and do different kinds of product, which we'll get on to in a moment. But actually, I'm interested because talking about that sort of linkage to CCPs and so on, and I'm just thinking about actually the European Bank for Reconstruction and Development. Now, they've spent a lot of time trying to build a single CCP for Southeastern Europe, and actually it's ended up nothing happening because everybody wants their own clearinghouse at the end of the day, which I don't think is going to make any sense. But Michael Smith, good evening, Michael, has written to us, Happy New Year, Les. Do you see the Saudis or even Abu Dhabi creating exchanges to compete with the DGCX and, say, the Muscat exchange for oil?
Yes. There you go. That's a very simple answer, Michael. I hope that answers your question. I think he's referring there to the DME, where we're talking about the Muscat exchange. I don't think he's referring to the Omani Stock Exchange. I think he's referring to the Oman contract that's traded on the DME and underwritten by the CME, if you like. Do I see Saudis or Abu Dhabi creating exchanges to compete with the DME? Yes, and they have done. ICE had the Maban oil contract, the oil futures contract of Abu Dhabi, set up IPO-VID, the Abu Dhabi exchange for the ICE group. The exchange is overseen by ADGM, but the clearing is done out of London to have the offsets with other products, notably Brent, of course. I would argue very strongly that the success was not just in setting up an exchange, as Patrick knows the number, it's something like 500 days, phenomenal achievement in COVID times, but also the success thereafter in terms of the volumes, which overtook the Omani contract on the DME within the period of about 8 months, and has gone from strength to strength. So I do see Abu Dhabi overtaking both Oman and Dubai in terms of that space. When it comes to the Saudis, I would like to see, I think many people would like to see a Middle Eastern benchmark. Now, whether we come back to that nat gas example of hubs, let's explore that perhaps with sort of a basket of indices, perhaps from local national countries. But I think you might find in the next few years that the Abu Dhabi contracts, and particularly the ICE exchange, will become the de facto Middle Eastern contract benchmark.
It's a great answer. Thank you very much. Thank you, Michael. Michael was also just clarifying the fact that he was talking about the DME's contract when you were talking to Muscat Oil. And in fact, we had a lovely comment as well from Nick Spencer Geen, who was just talking about the fact of, well,
Yeah.
what we need is LCH for MENA, which I think is absolutely right. In fact,
Yeah.
the irony surely in life is that when I entered this business, they had just deconstructed the ICCH, the International Commodities Clearing House. And actually, here we are, whatever number of, 3.5 decades or 4 decades later since they started more or less disassembling ICCH. And actually, the thing that would have been most useful in the world would have been the ICCH, because it would have linked Malaysia, it would have been able to link the Middle East, it would have linked all the way around the world and created a powerhouse onto which new exchanges could very, very easily add themselves and build a great business.
And Nick's exactly right. I mean, it's not rocket science, right? LCH for MENA, but there's no clearinghouse out there globally that's doing that. And I think there was a real opportunity for the region to show leadership. And I still feel that opportunity's there, because most exchange groups are constructed vertically. It's their matching engine. Typically, it's their screen and the likes of ICE and Globex, if you like, for CME. It's their clearinghouse and it's their exchange. But if you spin that round and make it a sort of a horizontal model where you can offer the clearinghouse for multiple exchanges, at least start within country, within UAE, and then look to move regionally across the Middle East. Yeah, exactly, Nick. ICCH, yeah.
Well, you are ICCH Classic. Yes, I am that old. I'm afraid so, that I can remember these things. I think actually what I can remember most of all was when I started, there was still all this paperwork came through for ICCH, but they'd actually disbanded it all, barring 1 or 2 things at that stage. It's such a shame, because that actually made such incredible sense and actually would create such an interesting opportunity. Because let's face it, even to this day, you've got issues where you look at the LME and over nickel. What's actually one of the problems there? Well, I mean, there are specific nickel problems, but actually a big issue is that with the way everybody's now calculating their capital, and particularly because of things like MIFIR and stuff like that, you really need to have interlinking pools. And that means you can have the biggest clearinghouse in the world for a hugely important product. And actually, it's not very useful because you're not interlinking or offsetting against the absolutely mellifluously enormous pools that are in, say, CME's clearinghouse or ICE's clearinghouses, etc. And I think that's a great point you make about clearinghouse for MENA. It could have so much potential if it was able to take flight. So here we are, we're discussing the whole fascinating and exciting business of developing commodity exchanges with Les Mail. And I suppose I want to go back a step. We're going to get to products in just a second. But one of the things that always interests me, and I mean, you've been involved in building a multiplicity of exchanges. I've been involved with 1 or 2 myself over the years, etc. And the thing that always interests me is that core question of staffing and headcount and making your exchange work. And I'm sure you've got some interesting thoughts on that, because I think DGCX, if I remember, has always been remarkably lean.
Yeah, I mean, I felt that there were some challenges when I came in, and I wanted to improve the diversity. I wanted to improve the gender balance. I wanted to improve the international kind of culture and feel and flavour in terms of just the languages that you hear on the floor. But I feel that people at their own peril underestimate the recruitment needs. I have now left DGCX and I run my own consultancy company advising other exchanges, stock exchanges, commodity exchanges, and a sort of a portfolio approach as well as independent board roles. And there's one of my clients that I'm helping at the moment. They're looking to develop an equity futures contract. They'll be building their own clearinghouse. And we were mapping the kind of program plan of the milestones that need to be achieved in order to do that. Yes, there's IT, always, legal, regulation, we know these things. But actually the critical path may well surprise you. And we were talking about this, in that you've got to identify talent. Then you've got to attract them and get them settled into that local country and be sort of trained, etc. Because you're talking about risk management of derivatives. The cash equity markets, it's always been a bit of a chip on my shoulder that the cash equity markets always get the sexy latest attention. from the industry press and sort of national media. But actually, who wants to know about the price of a stock today? I'd much rather know the price of a commodity or even a stock this time next month, this time next year. Now I've got some intel. I can take a hedge on that. I can speculate on that. But to do that, you need some pretty skilled staff. And we hunted, far and wide to get the top tier of management that we did get at DGCX. Outstanding compliance, IT directors I had, and in the risk and sales space as well, from across the globe. So very pleasing to do that. It didn't happen overnight. Even somewhere as attractive to live as Dubai, it's always difficult to attract talent. But it's a specialist skill in the derivatives space, and we shouldn't underestimate that. Actually, look, how many clearing houses are there globally? 60, 80? I'm not talking about CSDs. I'm not talking about, 100%.
CCP clearing houses, easily 60,
Yeah, exactly. I'm not talking about, 100% collateral next day, bank transfer. No. That's we'll call that Amazon. But for CCCPs, it's let's say you've got 60, maybe 80 tops. That's a very small number of people globally that are running highly complex financial settlements systems, and to find those resources and to attract, retain, and train is a perennial problem, I think, in this industry.
Yeah, it's a perennial problem, and I think also there's a certain degree of snobbishness amongst the practitioners who all seem to think that running exchanges is very easy, and it's a little bit like running motor racing circuits or something like that. It is really easy until you get that tiny thing wrong and you angle the barrier the wrong way and 3 people die. And then all of a sudden everybody goes, gosh, this is a lot more complex than I thought. I thought you just laid a bit of tarmac and, knocked up a few bits of hoarding and put some advertising around, built a grandstand, and you were off. And it's actually, there's a huge number of moving parts to exchanges that people, I think, don't understand the minutiae, particularly in the 3-dimensional world of derivatives. And indeed, messy times. Christopher Messina, his statement, commodities, why would anyone bother trading anything else? There's a man with a rare earth's excitement to say, and actually he's asked a question. So Chris Messina asks you, Les, as we're looking at developing exchanges, commodity exchanges, how do you view the threat to exchanges from innovations in blockchain-enabled trading instruments?
I don't view it as a threat. I view it as a huge opportunity. I think the threat is to the standard, antiquated banking financial systems, where I don't know how old SWIFT is in terms of a settlement system. It doesn't work all the time. It's not 100% compliant, if you like, in terms of its performance. But I think if I was a clearing bank and handling money transfers, I think the threat there is to those kind of parties more than to exchanges. As an exchange, I would love to have within day margin settlements. We were doing D+1, which I still think is fairly good for the DCCC clearinghouse. But to have the ability to margin within day, perhaps within a subset of products, not easy, I know, and particularly across clearinghouses with the holy grail of mutualization. That I think is a wonderful opportunity. One step at a time. We've seen a notable example of one of Patrick's favourites examples that he talks about down under. It's not an easy thing to do, but I think there's a huge opportunity with the blockchain-enabled DLT. My mother was a ledger clerk in her 1970s role. It's just a simple book, but it's a guaranteed book of that ledger trade. People kind of try to make blockchain more complicated than it actually is. It's a distributed ledger book. That's it. And it's so useful in the exchange space for settlements, particularly. I think there's a real opportunity there. But we've got to be sensitive to the needs of the market as to how we deliver that.
Thank you very much. A very erudite answer on the distributed ledger. I hope you like that, Chris Messina, a man who certainly is very excited by the prospect of smart contracts and more. Jonathan Cowan, hello. Hi, both of you. It's been a long time, Les. Good to see you again, Jonathan. I hope all is well in your world, and a very happy new year to you too. So, Les, we talked about it earlier. You've gone through the whole idea of staffing, talent, recruitment, and so on. But product development, product development is such a key area. And yet, so much of product development, people try to copy what's worked elsewhere and just bring it to their own market. It's a difficult mindset to get out of. How did you manage to keep out of that mindset at DGCX and genuinely innovate?
Well, I don't think that we ever got to the end of that journey of innovation. I think it's something that's always kind of out of reach, and that's good. It keeps you hungry. In terms of looking for innovative products. We don't get it right all the time, and I was relaxed about listing 10 contracts if one or two were to succeed. But we needed that rolling momentum of contract development. And of course, I would say to my management team, I would say to my board and to my shareholder that we're not the ones who are developing the products. We're not the critical path. It is the regulator. It is the regulator that determines whether these products would be listed and how they would be listed if there's any conditions on them. So typically, you might come up with a contract for unicorn futures, one of my wife's favorites. I'm not sure whether that's physically delivered, by the way, but even if you could come up with a contract like that and come up with the contract specs, talk to the market, talk to the brokers, get some client interest, you still need regulatory approval at the end of all of that. That might take, with a following wind, 3 to 6 months. And that is no criticism of the regulators. Innovation will always lead regulation, but it is the regulator that is actually the overall referee, judge and jury, if you like, to get these contracts out there. So one of the mantra that I would come to with the team was to be a member-led exchange. We are not the ones who sit, in a gold exchange on our gold throne and our gold desk to say, right, I think this is what's needed in the best interests of the exchange and the market. We should develop this product. No. 180 degrees the other way around, bottom up. And I was proud we had probably 20%, 25% of the staff were sales-based. They were out there wearing out the shoe leather, talking to the brokers, talking to the clients, talking about what products. We might not always be able to deliver those products, but we were able to try and at least show that we were listening and understanding the needs of our clients and customers, and try to concoct a product that could be useful and would be approved by the regulators.
Now that brings me to say great answer, but then I would also be copying what Chris Messina has said, because he said great answer in relation to your comment a few moments ago. He's actually invited you. He's giving a talk on February 15th on using the NFT structure for critical minerals advanced sales, and hopes you can join the event. Thank you, Chris. Let us know. I don't think that's the ZN one. I think that's somewhat later. We're doing something together. I know.
It's a shameless plug there. Shocking.
It is a shameless plug there altogether. It's not even the one which I'm chairing him in either on another event, but that's our two-time guest on this show, Chris Messina, talking through. And then I think probably it's going to be the final guest question of this evening, as we're barely 10 minutes to run. But Peter Secon saying, I know you've touched upon this, Les, but what do you see as 3 potential market gaps in the world of exchanges in the MENA region?
Ouch. I think, it's easy to say liquidity, right? That's just a bland answer, but it is true. The stock exchanges typically might have 50 or 60 stocks listed, of which perhaps 10% trade. And even then, only 1 or 2, you and I would argue, are liquid. So I think there's a massive gap in terms of the capital markets there. And the need for education to explain what a derivative is. It doesn't have to be harem in the sense that it can still be Sharia compliant. This isn't about speculation. This is about hedging an underlying risk or an underlying asset. And we started, and there's more work to be done in this area, but we started to work with the local universities to see how we could help that next talent, that next gen of talent come through to explain what a derivative is. Because I think people do understand what the stock market is. When people start talking about futures pricing, then they kind of get a bit scared and run away and hang off trading on the markets. And I think there's a real need, a legacy, if you like, from exchange leaders in MENA for education. So I think that's a real gap there, in addition to the liquidity gap, because there is a demand from the retail sector. We see that here locally in the crypto space. Huge crypto appetite coming out of the UAE, Bahrain with the Rain Exchange, of course, and indeed Saudi. So I think there's demand, and we need to tap into that. So I think all of those three are kind of connected: that liquidity, that education, and that ability to tap into the retail market.
Excellent. That's very, very useful altogether. And Jonathan Cowan has got a quick question. He's asking about, what about new tech companies, for example, Hydra X?
Well, yeah, I mean, I think there's a real need in that. I don't know whether Hydra X would fall into this space, but the whole e-commerce infrastructure, I think, is very, very interesting, because I think that will bring the possibility of new listings. I think we have a seismic shift in a generation of talent coming through. I don't have any children myself. My wife and I don't have children, but I do see my nieces and nephews who have all graduated now. I'm sure many of our viewers are in similar positions with their family evolution, and what that generation can do in terms of the e-commerce space, I think is frightening in terms of where that market could go. So I think in terms of tech companies, to some extent Hydra, but in terms of tech companies, I think there's the world is their oyster in that regard.
And on that point, I've just got to refer, thank you very much, Jonathan, for that question. Most interesting, bringing together, bridging the gap between marketplaces, e-commerce, and the investment world electronically. And it is, in fact, the ZEN event, which I'm actually chairing. So it's February the 15th, which just shows that I've forgotten what's in my diary 2 weeks ahead. I'm so excited about my trip to the UAE next week, of course, where we're going to be going to Abu Dhabi and Dubai, which should be very, very exciting indeed. So that's an event to look forward to in the near future. That's going to be Christopher Messina with me, actually, on behalf of the Financial Services Club in London and ZEN. Now, Les, we've reached that point where we've talked, my goodness, so effortlessly for the course of the better part of an hour about developing commodity exchanges worldwide, which you're still actively doing from all sorts of angles. Where do you think the capital market revolution goes next? It's
such a clever question. You ask that to everybody, and I don't know whether you actually replay the answers back to the poor suspecting victims on your programs in sort of future years down the line. But I'll stick my neck out. I'm actually quite bullish about capital markets. I see more upside than down. I see less about revolution and more about regionalization. We're starting to see it in MENA, if I just talked about MENA, and we're starting to see it here with some cross listings. I wish I could see more in terms of delivering what the market needs, in terms of that mutualization of collateral and having central clearinghouses. Wow, what an idea across multiple exchanges. Maybe we'll get there, but I think the consolidation of exchanges will really help in that regard. But capital markets generally, I think, had a seismic shift with COVID. We were all guilty of looking down on the retail investor. And I say that personally, I say it on behalf of the industry. These were numerous and they were annoying, and we didn't really want to get involved with the retail investor until COVID, when idle thumbs on the phones started to trade. And now that shift, as I say, has opened up a new client class for exchanges. And I think that there's a huge opportunity there to embrace that, to educate them, as I've said, and to regionalize it in terms of having a package solution that can really help the sort of more global traveller that we have now.
And there you have it, ladies and gentlemen. We've been discussing developing exchanges, commodity exchanges specifically worldwide, with Les Mail for the course of the last hour. He's the former CEO of DGCX. His company now is LM, which is a consultancy building exchanges and helping deliver exchanges around the world. 3 great quotes I thought you made this evening, just amongst many, Les. It's not the role for regulators to set caps and collars on market prices. Hear, hear. People at their own peril underestimate the recruitment needs of exchanges. Could not agree more. And finally, I think you absolutely hit the nail on the head there. We were all guilty of looking down on the retail investor in the exchange marketplace. And that's certainly something that COVID has managed to change far, far for the better, which has been absolutely fantastic. It only remains for me to say thank you very much to our guest, Les Mail, this evening. It's been marvellous having you coming live from Dubai and the United Arab Emirates. Really, really appreciate the time, Les. And so good to see you, because you were in the first batch of people we emailed over 2-3 years ago in the depths of COVID. And you've always been telling Racy, I'm going to do it soon. I'm going to do it soon. Sometime soon, I'll be able to speak better. And it's so good to see you. It was really worth the wait to have to wait for those 85, 90 shows before we could get you scheduled. And I'm delighted to see you here. Thank you very much also to our commenters, Les Calvert, Peter Secon, Matt Timms, Michael Smith, Nick Spencer Skeen, The Messy Times, Chris Messina, and Jonathan Cowan. My name is Patrick L. Young. It only remains for me to say that we're looking forward to next week's show. We're going to be looking forward to seeing why the world needed a 5th options exchange. Seems like a funny question, because that's, of course, talking about stock options in America, where we've now got about 15 of them. But why did we need that 5th options exchange 20 years ago, ladies and gentlemen? And it's a tale of fascinating regulation, the opportunity for markets to go electronic, and much else besides. And we're going to have fabulous international branding guru, as well as a remarkably proficient day trader in his own right, Bruce Goldberg, as our guest. Thank you very much to our production team today, to Beata, Jamil, Armenia, and Jake. It only remains for me to say once again, thank you very much to our guest today, Les Mail. We have been developing commodity exchanges the world over with Les Mail. This is IPO-VID. See us again. We'll be here, same time, same place next week. My name is Patrick L. Young. I wish you a great week in blockchain, life, and markets.